Hey there, everyone. Thursday night. It's May 25th. It's getting pretty late on Thursday night. It's been a long day. Did watch the stock market today. Did watch my account balance go up by $192 today. Another day where it goes up. I think that is almost every day, if not every day this week. It's been unbelievable. So want to talk about what I'm learning as I'm tracking this, and we'll try to make it easy listening podcast talk. Because basically what I'm coming to this conclusion is the market is extremely volatile. It has never been like this in the past where everybody has, access to immediate trading from their computer, very complex trading. In this case, we're talking about options trading. And the thing about the options is they change value very fast because you're leveraging 100 shares worth of financial value attached to this contract. Essentially, you're getting 100 times your money when you're purchasing an option, based on the movement of the stock. And so the prices of these options, someone has to sell this to you. Someone is selling a call or a put, and you're buying. In this case, I'm having this algorithm tell us which contracts to buy. We don't sell options because we don't like taking on that risk. I just want the algorithm to pick options that someone's putting out there where they're not necessarily properly valuing the volatility of the company. And so gathering the prices about how much this is, it varies, and it's not a specific answer. Like when you're looking at what the bid ask is here, stuff like this, like a range is between somebody is offering to pay $390 for it, and the person who's selling it wants to sell it at $540. So, there's a difference here of $150. Like that, we don't know what the actual price of this is, but not all the options are like that. Some of them have really, really tight, much tighter spreads, like $55 and $65 or $25 and $35. Some of them are even, some of our companies that it really recommends all the time have extremely good spread ranges, which is what this number is right here. And you want that number to be really, really low, not like that. This is wrong. Something's wrong here. For example, I can tell I absolutely have to update that. The spread range should never be negative. It should be as close to zero as possible. Yeah, we have what's probably supposed to be like 560 right here or something. That makes more sense. I probably typed it in wrong. We'll figure what it is later, but it's just obvious when you see a big negative number there. So good spread ranges are, for example, like Block has a 1.8% spread range. Some of the companies that the algorithm really thinks are great, like Verizon, says Verizon's number one today with a 1.2% ABS rank. That's a really good number. Why is that? Let's take a look, see what it's saying. It's saying the option spreads are, $3 and $2. So you have a very good idea that at the time of when I harnessed this bid ask price, which was not at the close, it was sometime earlier on Thursday, that the price was, if you put in an order for $45, $46, it's basically going, because this is a really, really tight range. And that's great. That means the value of what you're buying more and what you can sell it for in the future. Well, Verizon is showing up as number one because the options are only $93 total. And today they moved $1.05. So had you owned an option this morning on them, you absolutely could sell one of them for $105, ceteris paribus. Like there's a lot of conditions about what the price actually was to the penny and whether or not it would go for that. But basically that's what that means. This is a change in intrinsic option value, because when you buy a call and a put on the same strike price, then however they move around that strike price, every penny is worth $1 in intrinsic option value, because you're leveraging 100 shares. So $1.05 is $105. So 105 is more than 93. And that's why even on a one-day period, had you bought this morning, you would absolutely have to make money selling, in this case, the put option, which would have increased about $105. And you could have sold it more than the $93.50 you spent to buy the options. if that's what you got them for. That's why this shows up on this list. It says that you can buy an option out till June 2nd, which is a week from Friday. So it's only going to be 5 days of market activity because Monday the market is closed. So you only get Friday, Tuesday, Wednesday, Thursday, and Friday of next week. So it's still like a week, but the odds that they move a dollar in a direction or another it's just the algorithm thinks that that happens, and it seems to happen a lot. And that's why it's doing well. So I did buy some Verizon today. I actually bought 2 of them because I want to try purchasing a few more of these ones that are very low price stocks and shouldn't have a ton of movement, but mathematically are supposed to result in profit taking relatively quickly. So I decided to buy 2 of them. We'll see how that goes. So we'll keep an eye on that. Oracle comes out of nowhere today and jumps by $6. I had sold a put on Oracle and made money already and was left with a call that I thought was going to be worthless. And I actually had 2 of them because I also bought an Oracle for next week. Because I had one Oracle expiring tomorrow or today when you're watching this video, the 26th. I had one expiring then. I had another one expiring on the 2nd already. I sold both of them today at a profit. And I was just like, wow. And the Oracle that was expiring on Friday, the 26th, that one I'd already profited on the put in the paired transaction here. So I'd already made money, and this was just gravy, making more money on that. Excellent stuff. So they were a company that was on top of this list. They show up on top today. Excellent stuff from the algorithm, all around. Like, they moved 2 times as much as they needed to move to make money today. That's why I had a call that was way out of the money that ended up being in the money by the end of the day. Walgreens Boot Alliance. That is the Walgreens, by the way. It is the Walgreens you're thinking of. I looked them up today. I was like, wait a minute. They're called Walgreens Boot Alliance, but they are Walgreens. They're the Walgreens, the drugstore, I think. That they are. The pharmacy, whatever. So their options are still very cheap. They did go over $100 today. I bought another set today because this kept showing up on here, and it cost me $117. So it did go up from this. Who knows why? Anyway, so they move about 80% of where they need to move, or maybe even 75% of what they needed to move today. But they're still showing up on here. And it's kind of, you're buying an option for multiple days out until next Friday. So movements of 80% per day, get a couple of those in a row, and you definitely have a profitable sale. And you can even sell some along the way. The question about when do you sell? I saw a comment there from Sergio who's like, well, when do you sell? Do you look at what your profit is when you add the 2 of them together, and then do you sell the call and the put at the same time when you make a decision? You could. That's absolutely a way to approach it. The only thing I don't like about doing that is it neglects to include some of the time that you have purchased until expiration date on the option. And you can use that value, that there's a lot of value in that time. People don't assess the right value to it, which is why some of these options are less expensive than they should be. And so when you have something that's out of the money, but you've got 4 or 5 days left on it and you're not getting much because you're selling the other one, which is super profitable right now. Like, for example, if you had a Taiwan Semiconductor, a call and a put that expires next week, first of all, you had a great day, because them, along with every other semiconductor related company, because of Nvidia going berserk with their earnings and their forecast, just everything semiconductor chip manufacturing related just went up today. And they popped up on here with an ABS less than 2. And if you had them, you crushed it on your call, but you'd still have this put. Like, they're at $100 a share, and you've got a put that's at that's at like 88 or something. And you're like, well, do you sell that thing for like $10 or whatever they're offering you right now? And the answer is, if it expires on the 2nd, no way. Hold on to that. Hold on to that. You never know what can happen. Like, they can move another $15 down in a week. Absolutely. Like, they're crazy sometimes. So I guess in that case, I don't think you sell both at the same time. When that happens, I think you just sell the big one and you hold on to the other one for days. If you're selling it in a different structure where like you get a pretty good value for the other one, you're probably not guaranteeing yourself all that much profit, depending on what stage you are and how old the option is. but I think it's better to take profits on the ones that are profitable and watch the ones that are unprofitable, that they're not making it yet. Just watch them in time. That has worked out with a couple things. It worked out with T-Mobile today. T-Mobile is another one where I profited on both sides of the option this week. I sold their call earlier in the week and made money, and already guaranteed money. And then I ended up being able to sell the put today because they dropped by a bunch and got back in the money for my put. So amazing stuff. Algorithm does it again. Great, right? So as we're going down this list, some of these are companies that I had mentioned before that I said I'm buying and I would buy. Like I bought PayPal a couple of weeks ago. I didn't have them this week, but they're showing that I probably should have, because they're doing stuff like this, like almost moving as much as they need to move today on the downside, down to 59. Yeah, they're not doing so hot, I guess. Pfizer continues to be just fine and moving around. I sold a Pfizer today at I think it was like 40 or 50% profit. I own it. It expired here. I owned it for like a day or something. And I was like, do I really have to sell this early again? And I'm like, I'm up like 40 or 50%. I sold it for like $171, right? The call, because they just, or something, it was the call. I think they were up actually. They were up at some point today and then finally ended down, or maybe it was the put. No, I think it was the put. Sorry. They were down more than this. And I sold the put today for $175 or $171 after buying it for about $124. This is about right what I paid for it. One at 118 or something, 119. The point is it was, this showed up at the top of the list earlier this week. Algorithm was screaming buy it. It's still at a 2.5% ABS rank, which anything better than 5 is playable. Anything better than 5. So basically all of these guys. Supposedly it says do it. Now you got to look into everything in the company, and they may not all be perfect, but this is the order it's kicking out, right? And we have success with Oracle. We have success with Pfizer. We have success with T-Mobile on, I would call a grand scale of going, Oracle and T-Mobile going both ways this week, profiting. And you still got tomorrow. Like if T-Mobile drops more or Oracle goes up more, I'd count on T-Mobile going down more. You got even more money on that put. I probably sold it too early today. Anyway, point is, so far pretty good in this list. Medtronic I bought today. We'll see what happens there. They like bought a company or something happened there. See what happens there because something did happen there. Haven't bought PayPal. Starbucks. Told everybody Starbucks was #1 on Wednesday, I believe. I said or Tuesday or Wednesday. Tuesday, maybe. And they are down a little bit more again today. So now 40%. The strike price I remember naming for Starbucks was 100. And they're at 98.44. So they are halfway there in the down direction to making this profitable. And if they have a down day tomorrow and the market continues to be turbulent on the downside, which if you look at the entire market as a whole today, which we can see in here, you can see that it was not as bad as yesterday, but it was pretty bad, 35.65. Although look at that, market cap went up overall. Interesting. 365 billion came in today. I don't know where that is. I'd have to compare to yesterday, and I don't feel like doing that. It's complicated. But there was an up day, essentially, even though advancers were minimal. So basically, when you hear about a lot of money coming into semiconductors, let's look at just that industry for a second. Semiconductors, right? Let's find a semiconductors. Let's see what happens here. Yeah, look at that. Almost all of the money that went in that one industry. Unbelievable. You see this? 351 billion plus, most of it going to Nvidia. $228 billion increase in market cap in Nvidia from after hours yesterday to close today. That is what overreaction is. And I want to show you what that looks like. It sucks. Sucks if you didn't have an option there. They were really expensive. Let's take a look at the option rank pivot, and I'll show you what happened here. So I just wanted to prove, I was like, wow, where did the money come in? It all went into semiconductors. Let's look at every other industry besides semiconductors. Made 13 billion. Okay, so it was all semiconductors today. Bam. And yeah, I mean, they all went up too. It was crazy, right? Like, look at them. Like, everybody's up 24/17. I mean, did anybody go down? Who are you guys? Oh, if Canadian Solar is listed as a semiconductor company, they should be in their own solar category. Analog devices. If you went down today, you are a loser when it comes to being a semiconductor company. If you went up today, you got lumped in. They said in sympathy. That's the words you kept hearing over and over and over again. Was in sympathy with Nvidia. Everything else went up. Monolithic Taiwan, AMD. Should we talk more about AMD? Look at them going up $12 a share today, everybody. That's $1,200 in intrinsic option value staring at you right there. Cost of options was $700. So you had to risk 700 to buy the option you want, but you end up making 1,200 today. So you can, or you can sell one of those options for 1,200 more, most likely, than you bought it for, because they moved up $12. That's what that means. So, like, in practice, what happens is if you owned an AMD, which, believe it or not, I own one now. I did buy one today, unfortunately, after the movement, but there's probably going to be more movement because they're AMD. And what's happening with AMD and why they are steadily going up, and there's a tremendous amount of volatility. I mean, they're right here. Look at their volatility number. It's close to even Nvidia's. And I think the reason why is, here's what you end up having in a space where the demand for the GPU, or the specialized chip and semiconductor, and the use for all the processing and everything that's going on, AI and everything else, all of that is clearly on the, is what everyone's looking for. So Microsoft is saying, here's a company that's, I believe, in Korea, right? I think they are Korean company. There's United States. Look at me being wrong. I don't know why I think they're Korean. Well, okay, I guess they're a United States company for what it's worth. But either way, I don't feel like this company is partnering with Microsoft. I think that they're making very expensive, but also the cream of the crop, probably best in the world chips based on the nanometer scale with which they are rendering the layout or the format, or there's like a thing they reflect into with different weird elements that they have to reflect a certain way to predict how it's going to align to create these tiniest little sketchings onto chips to make them work perfectly. It is such a super technical thing. They've only got a few machines doing the craziest, newest stuff anyway, pumping out whatever they can. And because, yes, people will pay for what they're offering, and will continue to do so because they're on the vanguard of whatever. All that came to a head with their earnings release. Now, Microsoft, I don't feel like saying, you hear it, Microsoft is not the best pals with them. I think Microsoft's a client of them, right? If they want to use their chips. So they were looking for how can they emulate this product without having to use Nvidia. And that's where the story about them investing in AMD is, where everyone's thinking, well, guess what? Microsoft tends to have really deep pockets when it comes to stuff they want. And saying no to funding to get them where they want to be usually comes with a yes with Microsoft. And so not only is Microsoft doing all their things with AI, but they're now trying to essentially vertically integrate into the chip market with AMD. It looks like they're making the move with AMD. I haven't seen any news that is contrary to that. The only thing has been confirming that. So that's why they keep etching up, because people see stuff like this and they think AMD's market cap of 195 billion, while that has grown, I mean, that has probably almost doubled in the last 3 months, I bet. I know it's gone up by at least 50%. and it probably went up more because they were down at like $70, $80 a share before they started to blow up. I think even high 50s. I gotta look, we have to look back. But point is they're seeing this 200 billion. They're like, Nvidia is now going to be $1 trillion company soon, if they're not already, based on what the new market cap number calculation is. Because I think this doesn't include the full thing of today. If they are up at $1 trillion, people are looking at AMD and they're going to be like, well, if Microsoft's going to try to be pairing with them, then you should expect this to go closer to this. And so that's what's driving the price up. So purchasing options on AMD while they are expensive, I mean, think about, I just like, you don't think about days. This is AI summer here. Like, you're not thinking about days where AI and chips and stuff is not moving money, because clearly all the money in the market was all over that. And I guess any money that was looking to play right now that doesn't worry about the debt ceiling stuff decided that AI and chips are going to survive even if the US debt ceiling doesn't get raised. So I'm going to go and I'm going to invest in Nvidia. And what the algorithm here is telling us is actually Taiwan Semiconductor is the safest bet out of all of them somehow. And that's why it's showing up at a 1.8, meaning it's only $500, right? They only got to move $5 a share. They're in a similar boat. They're also a big company. And also news, remember, because you have a call and a put, any type of news, whether it be good or bad with them, results in stock price moving. And they moved double that today. What's the chance they move $5 in the next week? Yeah, pretty good. Pretty good. They're going to move $5 in the next week. Like, they're moving. They're in an industry that's moving. So there's ways of looking at the order of things, and it's good to look at kind of this order of how it moved today, and then also look over at what their actual ABS ranking number is, because it says things like stay away from Monolithic Power's crazy $3,700 strike price, even though they moved $7,000 in option value today, moving $72. Jeez, unbelievable. Still a moneymaker. Don't get me wrong. That's why the boom number is above 100%. All these companies, for example, all of them, every single one of them. If you had an option, a call and a put, if you were straddling this company over here, you absolutely mathematically had to make money today. The intrinsic value of one of your options increased by more than the cost of both of them, which is what this is. So when this is more than 100%, they moved more than one standard deviation and you could have made money. And all these other companies moved a huge percentage, right? And we look at the other direction as well. We saw that semiconductors crushed it. Well, who didn't crush it today? Well, let's see who didn't crush it. Aero Environment. I've never heard of them. Dollar Tree got punished, $18. Wow. Dollar Tree's options were $1,000 though. Interesting. Illumina. Here's one. This is why I bought Medtronic, as I saw this at only $244 and saw that they moved $400 in intrinsic option value today. And said, all right, I'm buying that one. And I bought that one. And it expires a week from Friday. So we'll see how it goes. Algorithm's pretty good with this stuff. All they need to move is $2.50 or more, and you guarantee a sale. Snowflake, I've heard weird stuff about this. They're really expensive, but they also moved almost $3,000 in option value today too. Crazy. I don't know what's going on here. These are for the really wealthy investor that wants to just throw darts at everything. And sometimes you're going to hit. You're not going to hit every time, but man, it really does look like you're hitting a lot here, right? What else do we have? Anything else? Right? Yeah, I bought Verizon because it was so inexpensive. I like low risk. Closer to zero these numbers are, the better the risk is. I only got to move 94 cents for between now and June 2nd. I didn't touch this, didn't really look into this. T-Mobile, I've been talking great things about. Time to buy T-Mobile again. I need to do that tomorrow. Clearly, they are awesome, 4%er. And that about sums up ones that actually moved one standard deviation down. Just these guys. All right. So all that colorful browsing through everything, I have so many companies now that it would be just become boring or whatever. I'm just going to talk about kind of the good things, and I'm going to talk about my balance because, who really cares about the 100 things I'm doing every day? You just explain the theory of what I'm doing and how I'm looking through the sheet, and yeah, I'll just do it that way. So yeah, up again today. I guess I'm up. I know in the last 3 days I'm up 192, 111. Okay, so that's almost 300. That's about 300. And then 600 and something the day before, right? It's like 640 or something, 620. So we're talking $1,000 in the last 3 days. I'm up and not doing anything special. Just sitting back, and I'll tell you what though, making some timely sales. I will say that. What I do is I'm monitoring it all day long. So things will happen like, for example, I guess it was Target. Target I had purchased and they expired Friday. And I spent less than this because I bought it late. But it was like at the 90 at the 153, whatever, I can't remember. Point is I spent about $360 actually total on the options I bought. And one of them today, because Target went down and they were down a little further than they finished. They actually went down to $4 I needed. And I sat there and they were hanging out there for hours, for literally a couple hours. They were sitting there and I'm like, do I wait until there's some more downturn on them and try to make more than just 40 or $50? And I thought to myself, you bought them for 360. You can take a $40 profit on one. You still have the other side of it. You're supposed to do that because it expires tomorrow. You don't have time. So I finally, at the last minute, after just staring at it for probably an hour back and forth, being like, are you ever going to go to 450 at least, or 500? I wanted to go to 500, but it wouldn't do it. And so instead of leaving it, because I didn't want to have to deal with anything opening up next day or whatever, I just took the $405 I sold it for. So I made $45 and I still have the call option. And they did turn around a little bit. And I'm really glad I did that. So you can't get greedy when you don't have enough time left on your option, is the lesson here. If it's Thursday and your option expires Friday and you're offered break even, essentially, if you're even offered break even, you're supposed to take it, because you don't know what direction things are going to go in just one day. And the less time you give yourself, the more chance you're going to have to sell for a loss. So really well-timed sale on Target today that guaranteed some profit. And you have to make this kind of decision. So you have to be watching, or you have to set up predetermined limit orders for the day so that they automatically go when the price gets there, even if you're not paying attention. You have to do one of those two things. Now, as for tomorrow, because I do kind of want to answer that question for everybody, like, what do you do? Well, still want to use the current ranking sheet. And Verizon's a winner, but it's also one of those where it's not a big mover. So like I want to see, and also, is there anything of interest? Because you want to not only look for what's moving, but we're kind of inferring that there's some news or something going on when identifying the movements of certain companies for the day. And that's one of the reasons why it's better than just picking random companies and doing this. But you can be profitable doing random companies on this. The straddle strategy is fantastic because I think that there's a lot of undervalued options out there, and finding where those are. And even when they're not undervalued, volatility is so great sometimes and unpredictable that you can accidentally get there all the time with almost any company, is what I'm finding. I'm not winning on every one of them. Like there are some tomorrow that I'm pretty sure I'm going to lose on. I'm probably going to lose on Roblox, and unless they move a couple bucks tomorrow in one direction or the other. I'm probably going to lose on Delta. Delta is screwing me over. I'm probably going to lose on MU, Micron Technologies, because I screwed that one up by not selling at the right time on like Tuesday. Whole mess of mistakes I made. I think I'm losing on about 3 of the, like 15 or something that I did for this week. It looks like I'm going to lose on 3 of them. And I might lose on Mendelez company as well. It's the 4th one. But the profits made on the other ones far, far outweigh those losses. And those losses are not yet defined. We still have Friday to go. So I'll have more of an update at the end of the day on Friday once the week is really over, and I can give you numbers on how the week went, because looking at the series of options that expired 5/26, just this weekend, this tomorrow is a fantastic way of gauging profitability in this strategy, because I purchased a whole bunch of stuff for next week, and that affected my account balance and my account value too. So like I was up like $700 at some point today, before around noon. And then I started selling some stuff and clearing out some things that were expiring on Friday. And then I bought a bunch of other stuff. So I don't know actually how much I made on just those options. I think it is, I know this up being this 1,000 in the last 3 days. The majority of that is on this 5/26 option period. So we've really been using the algorithm hard on that period. It was the first time I really started using this list every day. So for that list and that pay period to have a really good result is a very, very, very good sign for how well this is going. So what do you do for tomorrow? Well, I don't want to argue with the algorithm. So it does say if you can get a cheap Verizon at under $100, that it's not glamorous and you're going to make like 20 or 30 bucks, but that's 20 or 30%. And you'll probably make it in like a day or two. And that's kind of awesome. You just sell it. And so maybe you buy 5 of them if you want to have 500 of it, and see if you can make 25, 30% on 500 in a couple of days. Like that's probably the way you take that. And the chance of you losing all of it is basically zero. It's almost impossible. It's almost impossible to lose all of it. They would have to land exactly on your strike price and never move for that to happen. I mean, that doesn't happen that way. So it's almost impossible. And because this is such a low number, the risk is so low that the potential for profit is so great. So yeah, I don't want to argue with the algorithm. It says go Verizon. It says go Oracle. Keep saying Walgreens. And this is a reflective of semiconductor day, so it's a good number, but they're probably not going to be at that number tomorrow. But don't listen to me, listen to the algorithm. So these big two, how can you say no to Oracle when everybody's going down and they're throwing up a 5% day, which is what they did, over 5% day. Out of nowhere. It's just like I was sitting. It didn't happen at the open. It happened at like 11 o'clock or something, like 10:30 or 11. It started and it didn't end. Just kept going all day. And I was like, oh yeah, I have an Oracle call that was like way out of the money. Why is that all of a sudden at the like almost near the top of my list of profitable things today? I'm like, what is happening? And I didn't even look at what the news was. I guess they piggyback on the semiconductor money, maybe. I have no idea. But wow, just wow. And the algorithm had them. You'll see that the algorithm's got a lot of the same companies up here. What are the ones we recognize? These two, Walgreens, Oracle. This is the second time they've showed up, Taiwan. PayPal, Pfizer we're recognizing, Starbucks we're recognizing. Craft keeps being on here. I stayed away from it because it was so cheap, but T-Mobile we keep seeing on here. Micron up here again. This time they go up. I needed them to go down. I screwed them up completely. I lost money on Micron this week. That one I screwed up. I also didn't have it on the exact right strike. I had the strike price staggered on this one by $2 for some reason. Awful, awful, awful purchase. Do not recommend staggering the prices, meaning when you buy the call and the put, you want it on the same number exactly. Don't buy a call, a call at a 140 and a put at 139 or something. Don't do that, because the 100 you're missing in the middle comes into play more than you think in this strategy. And you don't want to have a buffer. You want to know exactly what you're paying for off of one strike price. And so if it's too expensive to buy because you don't like the price on the same strike price, it's too expensive to buy. That's the way I would look at that. So I didn't want to pay as much. Yeah, it was somewhere around like $400 something almost, or high 300s and so I staggered it and I screwed myself, and I ended up losing money on that one. Delta's on here this time. They're up though. went the wrong way on me. I still got a chance of making money on them, but I don't think I'm going to. We'll see what happens Friday. Cisco I bought. That was a new one that was on here. Morgan Stanley we're seeing again. Today they did move up. Okay. AMD is becoming our favorite company. Notice that notice this is a good thing about seeing AMD. Look at how this is the first time we see an option price above $700 out of the whole list here. Okay. And the reason why they're on here and they can still garner a good ABS ranking of not below 5, but they are below 10 is because they move like crazy. And the spread range is great. And it's just like they are a great pick. If you've bought week-long options on them doing this strategy from for the last 3 weeks since I started doing this and talking about them, you've won every week. Absolutely. And it hasn't even been close. You've won by day 2 probably every time you've owned them also. Like they are a winner. They're a winner. So they're on there. AbbVie does it again and goes down. I should have held my AbbVie put. I would have made so much more money. Marvel keeps popping up on here and was successful with Marvel. They're also semiconductor related. They're getting a little bit more expensive at their $49 strike price, but they have been moving. I haven't touched Adobe. IBM, barely made profit on IBM today. Barely did I sell. Also, very well-timed sale. They were actually down today, and I sold my put on them when they were down, and then I sold my remaining call, and then when they went back up. I did great with them, made about 15 or 20% profit when it was really close, but IBM comes through. They were a very top pick last week, and I did make money with them today, and they still have time tomorrow if you still have one. Amazon go up again? No, Amazon went down today. Abbott Labs is one I might try out at some point. Is there a mover as well? Nvidia gets a 10% ranking even though their options are over $2,500 because they went berserk today. Now, that's a earnings response move. They're not moving $74 every day, but they are probably moving. And someone's going to take a profit on that at some point. So, but you can't, I can't spend $2,500 on a week of and if you wanted to buy this out for a month or something, it'd probably be $10,000. Like it's going to be really expensive. So I don't know what to do here other than say, if you're in that tax bracket, then maybe you mess around with that, but it's still, it's over 10%. Remember I said stay under 10%. So there's that. So anyway, really cool stuff here. Really cool stuff here for those that are willing to engage in this. It's a really abstract thing to talk about the value of stock options and how to manipulate the volatility to result in shaving profits off whenever there's movement that passes a certain threshold, which is what we're doing here. It's really empowering because you can see that you can really make exorbitant returns, it seems, because you're guaranteeing yourself a profit and then almost like free rolling with another option that's way out of the money X number of days before it expires. And you're like, well, it doesn't look like it's worth $5 right now. I could just sell it, but I'll just sit back and wait. And then out of nowhere on the last couple of days, the stock flips and goes completely in the other direction for whatever reason. And you're making money on that one too. So it's like you bank your 10, your 20, your 25% or something when you can, when the first fluctuation happens. And then you could potentially make another 50, 100, more than that percent on the other side of that, where you have more option and more time and thinking about how long you can wait to sell it because you've already made profit on the paired transaction of buying both the call and the put on the company. So like being able to use the strategy for that is, it's funny. I'm waiting for the market to do weird stuff, and the weirder it is, the better. The crazier it is and the more that stocks go in one direction, the better. And there will be some days when like the entire market drops by like 3, 4, 5% or something. Like 3% or more is an incredibly bad day. But sometimes it happens when you have a put in every single one of these companies and they all drop by 3% in one day, your portfolio is going to go up. You might even double your portfolio on a day like that. Because especially what you're holding, because depending on what option level you're at, them dropping 3% could be a buck, could be $2, could be $3, could be $8, could be $20. Like it depends on what the share price is and what you hold. But like, yeah, you can make thousands. Clearly, you can, if you have thousands invested, you can make a couple thousand on a day where everything goes down by 3%. And so those days are going to happen. It doesn't even have to happen for the end of the week. It just has to happen on any given day when you have all these options where something you already have in the money. It'd be sad if you had a bunch of calls that were already going up and then all of a sudden everything went down 3%. Because if your calls had started bringing everything up and you hadn't cashed any of them out yet, then the dropping of the 3% might bring you back to just a little bit better than even, and it won't bring you back to real profit by having all of your puts really go hugely profitable. But that's probably not the way it's going to work. It's probably going to be more mixed, and you're going to have some things that were already profitable as puts, and another day, like when everything goes down, it just multiplies, and you're just like, wow, this was easy. So I'm happy with what the algorithm's doing. I hope that communicates a little bit about how I'm reading it, and we'll just keep seeing if the account balance can keep going up. There's a chance. I own a ton of stuff. I own at least 15 companies. What did I get? I got Citibank or something. I got Citibank. I got Comcast today. I got, oh my God, it makes me want, I'm just going to read them off to you real fast. Look, no source. I'll read them all off to you so that you know which crazy ones you can root for. And if you're somebody who's just buying what I'm buying, which would be funny, buying what the algorithm is saying. Well, this is what I actually bought so that I can, okay. Delta, eBay, I have. eBay screwed me today too. JP Morgan, I need them to go down tomorrow. Kimball Clark, but it's worthless extra. Don't worry about that. Micron, we talked about. Procter and Gamble, I have a worthless one because I already profited on them. Roblox, I have. That RETA company, which went down a little bit today. We'll watch that tomorrow. I have Target still. That's right. I need them to go up. I have AMD. Expires next week. I have BP is another one I bought today. British Petroleum, I believe. It's Comcast, Cisco, Citibank, MDT was Medtronic, right? I have MGM. I have Oracle. I have Pfizer. I have Starbucks. I have Verizon. I have the Walgreens, Walgreens boots. I have a Domino's, an old Domino's. I have an old LegalZoom, and I have Wells Fargo, and I have DraftKings. That's what I've got. The last few are not both directions. The last few are old ones I bought a long time ago, but that have times on their expiration date. So those aren't part of the straddle strategy. I only straddle stocks now. I will never do anything other than this strategy ever again. It's too awesome. So as we straddle everything, that's all I do now because it's proven to be so profitable and so fun, as well as really being profitable. That's the only way I'll play it now. So I just named all those companies, and other than needing JP Morgan to go down tomorrow, I have a JP Morgan where I have it staggered by $1, which like I said, don't stagger it, but I staggered them to save some money. And I have a 138 put and a 139 call, I think. They're hanging out like 136 or something about, I need them to go down like $1.50 at least tomorrow on the open or something like that. If they can go down, then I can profit on that. If they don't go down and they go up and they hang out between $68 and $69, I could potentially lose almost everything of a $340 purchase. So I'm torn about, because right now I could sell it for about $240 and just eat $100 basically. I could sell the put for $240. So I'd still have the call, but it's not worth much, and I would drop about $100, right? Maybe $90. I'm thinking maybe do that, but then I'm like, you got this one day. The market's supposed to be uncertain because of debt ceiling. I'm like, if banks go down tomorrow, I'm going to make money. So I'm sitting in that sense. I think that the I almost want to ask the algorithm, what do you do there? And I'm pretty sure the algorithm says I'm supposed to sell at the 240, honestly. I think that you're supposed to take what is about a 30-40% loss on the day before the option expires when you've been a moron and you staggered your strike price off by one so that you're risking more because you have that whole dollar that's like, if you see JP Morgan finish tomorrow at $38.50, you can just understand that I kicked the computer, because that would cause me to lose all of it essentially. If they just went, they opened up tomorrow at 38.50 and never moved, I'd hardly be able to sell any of my options. I'd get like $10 for my options. So I would lose like $330 there. So you're not supposed to risk that. Like, you're supposed to take 240 and be happy that you didn't lose everything and hope they go up and hope you can sell your call and make some of that money back on Friday. I'm not going to do that. I'm going to sit back and watch because, oh man, because I just suspect that the market probably has more down day tomorrow before Memorial Day. There seems like some, hey, let's finalize the month sell off tomorrow. Like, there's a lot of reasons that there's some selling happening on Friday. Debt ceiling, profit taking for the month, holiday weekend starting, and no trading on Monday. I mean, it's a lot of factors there. So the market kind of it didn't really go down today. It went up in every semiconductor related thing and about even on everything else is what we just saw. So it wasn't really that much of a down day, even though a lot of the things on our list here actually went down. All of these guys, yeah, it was just anything semiconductor related. And for some reason, weird investments like Schwab went up, and was it Morgan Stanley also went up too, right? I think so. Yeah. Yeah, but like the fact that things like Delta went up and Cisco went up, and like it wasn't a total down day. So it wasn't out the down day that I'd predicted. So even though things like Starbucks went down, which is good because that's the second day in a row that they did that for us. Even though they did, no, it was kind of a mixed day. So yeah, that we haven't had that super down day. If that down day is going to happen, it makes sense. It makes a lot of sense it would happen on Friday here. A lot of sense. Right? I don't know. We'll have to see. So it's almost Friday. It's almost May 26th. We'll enjoy the day and we'll see how we are finished at the end of the day, and we'll see if we're up again for at least the fourth day in a row this week. All right. Good luck, everybody. May all your trades be volatile and exciting. And may JP Morgan just go down on Friday. That's all I ask. Just go down at the open. Just drop to like 134. I'll be happy. And then I'll sell, and then we'll move on.